Well, it's Thursday, it's 4 p.m, so joining us now out of wonderful Perth is Davide Bosio from Shaw and Partners to go and get his take on the day that we've seen. David, welcome back to the program. Bit of a soggy start to FY22. What do you make of it?
It is. This is certainly not the way it was meant to go down. Like we've started a new financial year, and everyone's come in with a heap of enthusiasm, and what do we get? We're down about, when I left my desk, about 40 points. So there you have it. But I will say one of the positives, especially sitting over here in Western Australia, as I've said to you many times, David, we're the home of resources. We love our iron ore, we love our gold, and gold is the star performer of the day. So we've seen a big rotation out of, it looks like, financials and financial services, and gold has clearly been, and the gold producers have been the recipient of some of that transition of money.
Yeah, gold producers, of course, they were hit pretty hard yesterday, but then bounced back. They've been quite volatile recently. A lot of the index is down quite substantially from the highs that we saw last year. Across that spectrum that you go and cover there at Shaw and Partners, what are the companies that really stand out in that space as offering true value at current levels?
Yeah, so it's been a terrific sector for us. Peter O'Connor, who is frequently on Ausbiz, and I have a number of lengthy conversations about which way it's going, and we seem to agree that it's going higher, but then we scratch our heads as it continues to get sold off. But even recently we saw a rally up to around 1900, which is subsequently now gold is sitting around the 1775. So if you look through some of those bigger caps, stocks that Peter has followed very closely, we look at things like Newcrest, Northern Star, Evolution, Regis. They're probably the household names. When you step down a tier into that next level of producer, you've got companies like Ramelius, you've got companies like Silver Lake, for example, who are doing very, very well in their own right. Now, I think if you speak to Peter, no doubt he'll tell you the same. But we do look very closely at a couple of stocks. Evolution and Newcrest are probably two that we are fond of. What I will say is, if you step back and rather being stock specific, but look at the thematic around that sector. What's driving it is the key. And I think what we've seen from some of the miners has been an ability to control the cost push. So although we're in an environment where labour in particular is quite difficult to manage, we've seen the producers have been able to keep some control over cost blowing out. And even at today's gold price, these companies are making a lot of money. So you'll see companies like Northern Star, for example, they're almost 40-50% off their highs. In some instances, something like a Regis is off probably closer to 60% off their highs. So there's been a big pullback in some of the equities, yet their balance sheets have never been stronger. And that lends itself to an interesting environment going forward, where I believe we're going to continue to see strong production numbers from these producers. That's going to keep strengthening their cash, their balance sheets, and inevitably the bankers are going to start getting stuck into them, because bankers only get paid for transactions. And if they're not raising money, then I think the bankers are going to start convincing these big mining houses, in particular the gold ones, to go and use their strong balance sheets and their equity to go and acquire through M&A.
Yeah, because I'm looking at margins at the moment across that gold sector, and they do look very healthy compared to historic periods as well, but just really struggling to go and get any traction. So do you think that, like we've seen in previous episodes as well, that we will see a pickup in M&A activity? It's almost inevitable?
I think so. And if you put your shoes in that of a gold producer, what do? Every day they go to work and they take basically a ton of ore and turn it into gold, and so any producer has depleting assets. So essentially they're using their existing resources and they are turning that into gold, which they then they basically use to convert into cash, and then they pay their shareholders and reinvest in their projects. But as they continue to really ramp up production, because again, as you said, the margins are so strong, they are putting every every ton of dirt they can through their mills at present. So if you're an existing producer, you are pushing every bit of material you can through your mills at the moment to take advantage of this strong environment. So the flip side to that is, as you're consuming your existing reserves and resources, you also probably have to look outwards and say, well, in 3, 4, 5 years, when we've run out of resources, where are we going to get our next ton of dirt from? And so those emerging, call it explorers, who are out there drilling holes at the moment and developing real ounces in the ground, they are going to become very, very valuable for the existing producers. One stock which no doubt you guys are very, very aware of, Grey Mining. We had them in our offices last week, and they're talking about their new resource, which has only recently been released around Hemi, being 6.8 million ounces alone, taking their global resources to 9 million ounces now. So that's a phenomenal deposit, phenomenal ounces in the ground, and it'll be very interesting to see what happens in the fullness of time to that company.
What rating do you have on De Grey at the moment? Is it a buy at these current levels? Because like most of the other names in the sector has been suffering a little bit of late.
It has, and I think from a Shaw and Partners perspective, De Grey is not a company that we currently have an analyst research note and therefore a recommendation on. But if you look through the companies that are, I guess, covering the stock, it's trading at slightly removed from, let's say, what its intrinsic value is. You have to look at a stock like this and say, well, no one really knew, call it until last week, what the size of this initial maiden resource around Hemi, how big it was going to be. And I think that some of the punters out there probably think, well, now the resource is out there at 6.8 million ounces, okay, we can quantify what that's worth. Others will probably say, well, that's a starting number, and that's only going to grow as the company continues to explore. Mind you, they've got 12 rigs running at any given time, so there's a lot of exploration work continually being done out there. But I think you have to look at it as really the size of the prize, and they are really opening up the Pilbara region of Western Australia, and they, any company that's able to define a resource of that size, and I think most people would probably agree that if they keep doing the work that they're doing, that resource should go north. I think that's going to really start getting the attention of some of the majors for many reasons. One is what they believe they are doing is creating a tier 1 asset. Now, a tier 1 asset in their definition is a company that produces 300,000 ounces per annum for no less than 10 years in a tier 1 jurisdiction, which again, Australia, I think most people would agree, is a tier 1 mining destination. So,
Dave, go ahead.
Yeah, so I think the companies, as we mentioned before, some of those existing producers, the Northern Stars, Evolutions of the world, etc., they are scouting the world looking for these sorts of deposits that fit all the categories. And that's not me saying that it's a given and that someone's going to step in and take it over, because I do believe the board of De Grey have openly said that their intention is to go and mine this deposit themselves. But it starts to make it very, very interesting. And I think M&A of any nature in the sector, and whoever may be the beneficiary of M&A activity, good luck to them, but I think it's only going to lift all boats in the sector.
Understood. Look, it'd be blasphemy not to go and discuss iron ore with someone sitting there in Perth. What are your expectations coming in ahead of this reporting season when it comes to iron ore miners? We know that Fortescue is going to be paying a massive dividend given what the revenues that are coming out of that company at the moment. What is the expectation after that dividend is paid, though? Because people are looking at the price and they're going, well, how long is it going to remain here for? Should we take the money and run now?
Yeah, it's an interesting one, David. I think that's really the hard one that investors have to get their head around, and we do have this argument on a very frequent basis. If you speak to many of the analysts out there in the marketplace, I think the general consensus is that the iron ore price is probably historically at very, very high levels that one would expect come down. If you talk to our the experts in our government in Australia, they've factored in a price of $55 per tonne in their budget estimation. So that is a hell of a long way away from plus 200 where we currently sit. So either they're sandbagging a little bit and keeping a little bit up their sleeve for the next budget, or they've got their numbers completely out of whack. But let's just say, I think across the board, most analysts out there feel that the iron ore price is going to come down slightly. If you do look through to some of the factors there, though, companies like Fortescue, BHP, Rio, who are close to our hearts, obviously their earnings potential is massive. They are taking advantage of the advantage that they have in the current environment. And I do feel that, although many investors can look through now and we can see the dividend's going to be huge, the return is going to be phenomenal across these companies. What we have to look at as well is at what point does the market look out and say, well, that's no longer going to be the case. So I guess the argument is for and against is that our iron ore players also understand this dynamic. They also understand what's happening between China and Africa, which I guess that is where the opportunity lies for China to decouple themselves from the Australian iron ore producers. But that is still a 5+ year time frame, and that's assuming that these massive transformational development projects do come out of the ground on time and on budget. Now, I think one thing we've seen is certainly not to underestimate China, because they can and will and do make these sorts of things happen. However, our iron ore companies are also very, very conscious of this. Now, we had BHP presenting to our team last week, and they also made a very, very interesting comment, which I think is worthy of mentioning, which is that they are now the lowest cost iron ore producer in Australia.
Interesting.
And that's a big change. So they've kind of knocked Fortescue off the pedestal, and Fortescue have been able to brag about that for many years now. But that probably tells you something about what the majors are doing. They probably can see the future, and they probably understand that they're in a particularly good environment at the moment, price-wise, for iron ore, but they are also keeping a handle on costs. They're not letting the cost side blow out, and they're ensuring that the margins are strong. Now, if they continue to do that, I believe that these companies are going to continue to drive massive profits out of their iron ore businesses. So I don't know if I've helped to answer that question of yours or not, but let's just say in the short term, income and dividends will be very, very high. And that'll be driven by the current iron ore strength. But I do feel that the iron ore companies and producers do understand the requirement to keep those margins very, very solid, which hopefully means dividends and returns stay high for longer.
Yes, lean, mean ATM machines, you might describe them at the moment. Making lots of money now and getting themselves match fit for the future. David Bosio from Shaw & Partners, thanks for joining us, and enjoy the rest of the afternoon.
Thanks, David.